Hey everyone. So I'm Atul and I'm a senior solutions consultant at PriceLabs. Been here for I think about 2.5 years, and I manage the India market as well as other markets in Asia and Africa for PriceLabs. I'll share my screen and we'll get into a deck where we basically look at what's happening in the short-term rental market in India and how it's changing, how it's evolving. Feel free to ask me all the questions that pop into your mind. All right, guys. So a quick agenda. We'll talk a little bit about PriceLabs, then how the Indian market is evolving, occupancy, ADR comparisons, top cities or markets in India where short-term rentals are operating, and then a little bit about adoption, performance based on dynamic pricing as well. Okay, first off, a little bit about PriceLabs. So we are a revenue management and dynamic pricing solution. We started off initially in 2014 in the US, but then we've scaled pretty much all over the world. Currently, we're pricing about 500,000 listings on a daily basis. And we're integrated with over 150 property management systems. We're also directly integrated with Airbnb and Booking.com. We have all of these integrations and we serve the short-term rental market, mid-term rental market, serviced apartments, hotels, villas. We have specific ways to set it up for any kind of property that you're currently managing. In the integrations, special call out to RMS Cloud for joining us here as a partner as well. Now, when we talk about the market performance for India, let's look at how the listings are overall growing, right? Because India as a market is growing really quite well. Overall listings have grown about 37% in the last year, which is really quite a lot, right? So we're hitting right now about 166,000 listings all over India, right? And if you see back in 2023, about 2 years ago, that was about 94. But this also does put some pressure on existing operators, right? Supply is increasing quite a bit. So let's look at what's happening to the demand as well. So when we look at the demand, the good news is that the demand is also increasing. So booked nights, how many nights are getting booked overall are growing by 27%. So one clear difference we can see is that supply is growing faster than demand currently. So again, it is putting a little bit of pressure on the existing operators and even new listings which are entering the market, because if supply is growing faster than demand, then usually based on economics, the price drops, right? Let's take a look at what's actually happening on the pricing and the occupancy. Yeah. So as we see here, now just a disclaimer here. These are average figures for the entire India market. So this may not be representative of your business, especially if you are running a professional short-term rental company, right? You're probably doing occupancies much better than this. The ADRs that I show also may not be representative, but this is overall the average of the whole market, right? So if we see, we are seeing a small occupancy decline of 1% over the last 12 months. And interestingly, the seasonality is also shifting a little bit, right? So Feb this year did better than Feb last year, whereas Jan did worse. April did a little better, whereas most of the other, basically Feb and April have done better, whereas most of the other months have done worse. So there are slight shifts happening. And overall occupancy slightly declined. Now, when we look at past the ADR as well, ADR has also declined by 2%, right? So it is kind of visible that there is pressure coming from excess supplies. Overall, maybe during December was 5,300 rupees on average, now 5370, in uh, 2024 to 25, right? We're looking at the past 12 months. So from this month going ahead, now when we're seeing this, now we'll also look at the overall market, right? What's the kind of segmentation, right? What is the market made up of? So here, this is really interesting. So about half the listings, a little more than half, are coming from small listings. So small hosts, which are basically those who have 2 to 10 listings in their account, right? Those who are running about 2 to 10 listings. Then individual hosts are making up about 21% of the market, right? Those who are just running one single property. Interestingly, I am also a small host myself. So, yeah, I think there are many small hosts like me who are, making up pretty much majority of the market here. Then about 17% or 27,000 listings in India are being run by hosts or property managers who have about 11 to 50 listings. So, yeah. And then we're seeing that only 8% or 12.9 or about 13,000 listings are being run by large property managers who have over 50 listings in their portfolio. So, what this is showing is that the market is still currently quite fragmented, right? There are a lot of individual players and small players who are basically about majority of the supply, right? And this usually we see in a lot of markets which are kind of in that maturing phase where it's not yet fully matured, but it's getting there, right? So this usually presents an opportunity for medium to large hosts or property managers to kind of bring in professional services, professional operations, sort of streamlined businesses and potentially get really good results, right? Because the market is currently so fragmented. But we will also look at more about how dynamic pricing is actually used in the market, right? Because again, another thing that we see usually in markets which aren't very mature with short-term rentals, pricing tools, maybe property management systems, maybe operations tools which make it more efficient. Use of tech is low, and this presents a great opportunity for those who are willing to invest and those who are willing to put in this effort to up their game in terms of technology and make the most of it. About 40% of the market is still running on static pricing, which means they're not changing their prices at all. It's constant prices pretty much throughout the year, except for possibly some changes on events, maybe putting the price up for New Year's or Christmas or Diwali, but the rest of the time it's mostly 28% is limited changes, 25% is moderate. So there's some level of fluctuations, maybe week to week, and then high is or full dynamic pricing means they're basically using a dynamic tool like PriceLabs, which ends up changing the price for each day based on the demand for that particular date. Most are using static or low pricing where they're just changing a few dates here and there. So that makes up about 67% of the market, right? Most of the rest are also using some level of dynamic pricing where they may be setting up like weekly prices, things like that. And about 7% is only using a fully dynamic pricing tool. This is important because we look next at how metrics change when you're actually using a dynamic pricing software. This is really interesting. When we see the occupancy overall, all of India, right? We're looking at occupancies of those who are using high level of dynamic pricing. So that's the red line. And then we're seeing the different segments we're using, moderate dynamic pricing, low, or completely static. Now, completely static prices, I think you can clearly see there's a huge gap. But even between moderate where you're making week to week pricing variations and high where you have actual daily price variations, there is a pretty big gap. And we see that overall when we're comparing with most of the market, which is using basically no dynamic pricing at all, static prices, we're seeing a 30% higher occupancy. I think it's pretty evident here from the occupancy. And then we'll also take a look at ADR, right, which is the average daily rate that you're able to achieve. ADR, I do feel like there might be a slight correlation as well, right? Because it might be that the premium listings are possibly using more high-tech tools like dynamic pricing, and hence they're also able to achieve higher ADRs, right? Higher rent, daily rent. But when we look at occupancy, that should not be the case ideally, because any listing, as long as it's priced correctly, should be able to achieve a decent level of occupancy where it's comparable with the rest of the market, right? But since we are seeing a clear difference, this is clearly the impact of doing better pricing. We see 60% increase in the actual price that you're able to achieve from bookings compared to when you're using no dynamic pricing. So the red line again is with full dynamic pricing, and then the others are when you have different levels. Blue is when you are not using any dynamic pricing, you're pretty much having static prices. Going forward, okay, so we also wanted to look at some of the key markets. So overall, as we saw, the listing count has increased in India overall to about 166,000. But what are the key markets? So actually, Goa comes out as the top market. Then we have Delhi with 9,000 listings, and currently Bangalore with 8,500 listings, and Mumbai with about 4,000 listings, right? So these are what the top markets of India look like. And when we're seeing which is growing the most, so Bangalore is growing the most. It's jumped up from about 6,400 listings last year to 8,500. Mumbai seems to be growing the least, right? And yeah, this is what the listing growth, or you can think of it as supply growth, right? So supply and demand, simple. So supply is growing by this much. And then based on that, how is the demand as well growing, right? So Bangalore, although it's seeing the highest supply growth, we're also seeing the highest demand growth, which means it's kind of matching. Both are growing hand in hand. Mumbai and Goa, both the number of nights that are getting booked, growing by about 17%, right? Delhi is growing by about 23%. Right. So if uh, we take a combination of this, we'll sort of understand how occupancy is changing in these markets. So when we look at the occupancy comparison of the different markets, we see that Mumbai is able to get consistently sort of the highest occupancies. Mumbai again is yellow, Bangalore is red, Goa is green, and Delhi is blue. Overall, throughout the year, Mumbai is doing really well in occupancies. Bangalore, it seems like it's moving up and down, fairly seasonal, with the seasonality kind of being opposite of the Goa market, right? Because Goa market is clearly peaking during the winter months, which is December, Jan, Feb. We all kind of know this, and this seems to be the opposite for Bangalore. And when we look at the Delhi occupancies, seems to be currently the lowest among the main markets here. Now we look at the ADR as well, right? Because this will give us an understanding of what are they able to achieve in terms of prices and in terms of actual bookings in each market. So again, Goa, highest ADRs overall, right? Mumbai comes second, Delhi third, and Bangalore comes last in terms of the ADR, right? But now we're seeing different levels of ADR and different levels of occupancy for 4 different markets. A little difficult to figure out actually which market seems to be the best to do business in, or which is making the most money, right? So this is why we generally try to focus primarily on a metric called RevPAR. Now, I'm sure some of you may have heard this term, some of you may not have. So I'll just quickly explain what RevPAR is, right? So RevPAR is, on average, per day, how much money are you able to make? So let's say you have a listing that's been active for 30 days. Now, your ADR is 3,000 because that's what you were booked for on average. Your total revenue is 30,000 rupees because you were booked for 3,000 on 10 days, 30,000. And when we divide that 30,000 by the number of days you were active, so you were active for 30 days and you earned 30,000. So on average per day, you're able to make 1,000 rupees, right? So that's what RevPAR is telling you. Based on the number of days you're active, how much are you able to actually make per day? And for all the revenue managers and property managers out there, I would really suggest that you start focusing on this metric and not purely occupancy, because you could be doing 80% occupancy at a certain ADR and making a lot of money. But it's also possible to do possibly 70% occupancy at a higher price and actually make more money than you were making earlier, right? So when you start focusing on the RevPAR specifically, we'll be able to understand. So coming back to the data, we see that Mumbai overall, although Goa is spiking like crazy during December, Mumbai overall seems to be having the best RevPAR. On average, people are making 2,400 rupees per day, right? Goa again comes very close with more seasonality, where peak season you could be making as high as 4,500, but low season you could be making as low as 1,600, right? And then we see Delhi next and Bangalore last overall. So this is sort of how much you, on average, each listing is making per day, right, in these markets. Another interesting point about India market overall is that the booking windows are really short. So what do we mean by booking window? On average, how many days before check-in is the customer booking the property, right? So already the booking window in India is really short compared to international markets, right? So people are booking, at least in 2024, only 8 days before the actual check-in date. And now this again seems to be happening because of increased supplies. Again, customers have more choice, they can wait a little longer. Booking windows are dropping to about 6.5 days, right? So on average, now they're booking only 6.5 days in advance, not 8 days as it was before. And it seems to be dropping in every market. The biggest drop we've seen is Mumbai, where it's dropped from 8 days to 6 days, but every market is dropping a little. So, yeah, again, that puts quite a bit of pressure on operators, right? Because now, if the average booking window is, let's say, 20 days, right? Which means I'm probably going to get bookings 1.5 months in advance as well. And then as it gets closer by about 20 days, ideally, I should be at about 50% occupancy for my portfolio, right? If you think about it that way. And then I have, if I don't end up getting the occupancy, I still have about 20 days to work on my pricing and make it better and make sure that I fill up all my listings and I'm still in a decent place, right? But now when we look at the India market, 8 days, if you're not booked around that time, you really do need to hurry and try and make the most of it, right? Because it's very late. You have very less time to sort of fix this, puts more pressure. That is most of what I wanted to cover. Just a few final insights. Listings have increased by 37%. Booked nights has increased by about 27% as well in the last 12 months. Occupancy, overall, a slight drop by about 1%. Mumbai's occupancy and RevPAR both are sort of the best currently in India. And we see that a large portion of the market is being managed by small property managers and individual hosts, and there lies a good opportunity for medium to large property managers in the market, right? And currently, only 32% of listings are using some level of dynamic pricing, which means they're changing their pricing week to week or daily to some extent. But those who are able to use dynamic pricing, they're able to get much higher occupancy, but 30% higher occupancy and 60% higher ADRs. I hope this has been useful. I might have run through it a little fast, but I'm happy to discuss it with anyone. And really, one uh, cool thing is you can actually get all of this data from PriceLabs, right? So we have a tool called Market Dashboards, and if any of you actually create an account on PriceLabs and add some listings, you would get a free credit to create a market dashboard for any market that you are operating in. So you will be able to see this kind of metrics, right? What's the ADR of my market looking like? What's the occupancy of my market looking like? How has it changed from last year? And you can create specific markets, right? One of the reasons we stuck to the top four cities or markets is because especially holiday markets in India are distributed all over India, and it's a massive country, so very difficult to pick up data for us, every market out there. But yeah, you could look at specific markets, right? You could see what's the market for Alibag looking like, and you can see this data and use it. If there are any questions, Dhanik. Yes. So we are including short-term rental listings. So we're not looking at rooms, which would be something like a shared room in an apartment, or even just a room without any other facilities like a kitchen. So we're looking at anything from a studio upwards. So studios, 1 bedrooms, 2 bedrooms, 3 bedrooms, and so on, right? Villas, all of those come in, just not hotel rooms or rooms which would be in a shared apartment, stuff like that. Yes, Vishal, you will be getting the recording, absolutely. And the deck that I'm presenting also will be shared with you. Also, there's a question from Wrinkle. With properties increasing and bookings decreasing, is it advisable to lower rates, remove minimum stay restrictions, or yeah, what do you focus on to get more bookings, right? Now, I think it's really important that we try and read what's happening in the market and then be a little proactive, because often it's difficult to figure out what's the right price for the right time, right? So we think that, okay, you know what, last year during July, I was able to sell for this rate. Generally, we have like a slight growth mindset, right? So we think that I should be able to sell for about 10% higher than last year. But that's often, that might not be possible because the market itself is changing. So I would suggest really do research on the market, understand what are the prices that are prevalent in the market, what are people able to sell at, what are the occupancies in the market looking right? And this is something that PriceLabs can really help you with. Obviously, if you're using dynamic pricing, the prices would automatically be getting set based on these insights. But also you can find out any date, is it pacing in my market better or worse? Because even though the occupancies overall might be dropping and the ADR overall might be dropping, that does not mean that the entire year you need to price a few percentage points lower than you did last year. It means that some dates you might be able to get a better price than you got last year. Some dates you might have to drop your price a little lower. It really depends on the demand for those dates, how those dates are pacing. So yeah, it's really required to read the market and price it accordingly. And yeah, try and get some bookings in advance. Yeah, that's the best thing. Using the right price, possibly you might end up with slightly lower uh, prices than last year, but on a lot of dates, you might be able to get better prices and better occupancy as well. Okay, what else? Okay, Jason. So Jason, a lot of the market closes bookings through offline means. So even if the bookings are closing through offline means, they will get calculated in the occupancy that we're calculating, because they go unavailable, right? You're basically not going to keep a listing available for a certain date if it's already gotten booked. So it will go unavailable and we'll be able to calculate the occupancy based on that. However, if the rates are different, agreed that the ADR that we actually calculate might be slightly off, right? And we've done this tests with our own customers as well to try and understand how much the variance actually is. And it's not a huge amount. There can be a slight, maybe about 5% difference in the ADR that we see overall, like in our data, and what actually is happening in the market through offline channels and stuff like that, right? But the good news is that when you're using a tool like PriceLabs, we don't focus on the prices. we focus on demand, and demand is signaled by occupancy and not by price, right? So even if the entire market is showing, prices of 10,000 or 15,000 rupees, and they seem to be getting booked, we're not going to basically set your price so high thinking that you will also get booked at that price. Rather, we're just going to see how many of those listings are getting booked. Are they getting booked faster than usual, slower than usual? And then we're not going to price match you against that, but instead, based on the average price that you set for your listing, we'll move it up and down so that it aligns with the demand in the market. Right? I hope that makes sense. Yeah, it's just one more question, so I'll take that as well. How do we determine the pricing of our property if we're new to the segment? If you're new to the segment, you're trying it out, the PriceLabs has a couple of really useful tools to help you out. One is there's a tool called Revenue Estimator Pro, and that will actually give you a revenue estimate for any address anywhere in the world, right? And that'll give you an instant revenue estimate. Again, if you create a free account on PriceLabs, you'll get 2 free tokens where you can try this out. So you can try out the Revenue Estimator Pro, see what the price is, or what the ADRs, what the revenues are looking like. But also, if you actually connect PriceLabs and you go to set your base price, right? We'll ask you certain questions. Now we'll automatically pinpoint the location that you're in, and we'll ask you, compared to other properties around you, are you upscale? Are you a premium listing? Are you somewhat average? Are you in the economy segment where, it's a little below average compared to the listings around you? And then we'll help you position yourself in the market, right? Because you could position yourself at the 90th percentile, being the most premium. You could position yourself in the 50th percentile or the 25th percentile, and that's going to determine what your prices look like. So we'll help you, but you do need to do some research yourself and sort of figure out where you would stand compared to the local market.